Welcome to Work Hard, Play Harder, where cash flow is king. With Jake Haynes, this is where powerful ideas, real experiences, and game-changing strategies help you maximize cash flow and build unstoppable success. Now, let's dive right in.
Hello and welcome to this amazing podcast. We've got a very incredible person on here today. Jeff Putnam is an expert in the area of short-term lending, short-term loans. He does lots of lending and lots of loans, but he is an expert in that area. And so when we work with many real estates and flipping activities and all these kind of things, he's going to give us lots of pointers on how to get the very best deal on all that. Well, hello and welcome to the commercial for today, and it's sponsored by Action Tax. And I would love to share with you today what has made our firm so successful and our clients that we work with so successful when it comes to helping them grow their business, be successful in business, in life, in all areas. And we talked a little bit about it from the very beginning, where we talked about, the success pyramid and how the top is to be a celebrity. And then we talked after that about how the real value in life comes from the recognition of success in your life. And today I'd like to talk about the foundation for what brings about success and how you measure it in my life and for many of the people that we work with, and that is goals. And that is a big word that lights some people up and turns some other people off. It's a word that can be synonymous for a lot of different things. But let me tell you a little story. I was about 13 years old, and I was in a Sunday school class. And the Sunday school teacher said to all of us, he says, you should complete some goals in your life of what you want to do. And I listened and I was intrigued. I didn't really know much about the idea when I was 13 years old about goals, but I listened and I went home, and she challenged me and everyone there to set some goals for what you want to achieve in your life. And I came back the next week with about a dozen goals of things that I wanted to complete in my life. And this wonderful lady was just thrilled to death to see that I had set these goals. And she's like, man, this is wonderful. You gotta grow on this and build this and make it something wonderful. And I went back again and I started writing down all these things that I wanted to do. And the key was I wrote it down. I created for myself, through all the goals that I set back then, an entire pathway for how I would move forward and start to define success in my life. I set many goals, and you gotta imagine this is in the mind of a 13-year-old and then when I was about 16, I actually really dug into them, and I'm like, okay, I'm gonna create 100 lifetime goals. And I did that. And some of those goals were just like the silliest, simple goals. I remember I was terrible. I was really horrible at that point in my life at wrestling. And one of my goals was to win one match, and I did it. I won one match and then I got out of wrestling. But well, in that time frame, it was like to get good grades, and then it began to go around places around the world. The where, when, what of life. To build my own house. To do all these things that I thought I'd like to do financially and spiritually, socially, emotionally. They were all things that I wanted to achieve, and the list kept growing and growing and growing to 100 goals. Now I have 120 goals for my life that I've set, even a little bit more than that. And the last, I gave myself license to change those goals, to modify them. So they have been drastically modified over the years, but I have completed again and again and again these goals, and I've completed about 70 of them now. And I continue to press forward. And what they have defined for me is my vision. Your vision for your life is what you see yourself being at the completion of a wonderful life, right? Mine was one of contribution and success measured. And with that, you define a mission. A mission is the process by which you'll reach your vision statement that you make. And that mission is like it's the pathway. It's the and you may have heard this in many parts of life, but in work, I have defined a vision. In my life, I have defined a vision and a mission. And our team at work lives by that mission statement and that vision. And with that comes the 100 lifetime goals. And then with the 100 lifetime goals, I set, and I have since I was 16. Every year, I have set a lot of what I have called New Year's resolutions. I've set, maybe 6, 8, 10, 12, but I have always completed five every year since I was that age. And that's been like 35 years that I have completed five goals every year. And I go back and I look at what I did when I was in college, when I was in high school, when I was starting my career, when I began to develop and starting my own firm, when I started to grow the firm, when I was working with a coach, when I was really exponentially growing the firm. Those annual New Year's resolutions, I call them, were my focus every year. And I completed those things. And it was powerful to have those goals completed. And from there, I would come set quarterly goals. And I learned that from my coach, Action Coach International, Kevin Weir, that I worked with for a long time. He helped me set quarterly business goals. And that might be like 10 to 20 goals that I would complete over a 3 month period. Then we would have another meeting session, review it, and then go 3 more months and have another meeting session, review what went well, what didn't, go forward, set some more goals. And this went on for years with my coach as I grew and grew and grew and grew. And I incorporated family into the goals and staff into the goals and other associates into the goals and everything that I did to build in other people and involve other people helped me to commit to these goals. I would disclose them, I'd share them. I'm like, this is what I'm doing. I mean, right now, I have told more than 100 people that I will be climbing 5 mountains this year as part of one of my lifetime goals to climb the lower 49 peaks in the United States. And so this year we climb actually four in the United States and one foreign mountain as I carry forward with another goal. So that's just one of my New Year's resolutions, and I work on all of them. So another focus to making goals a thriving success for you is to have them be SMART goals. So in relation to that, I like to share with you this concept of a SMART goal. And a SMART goal is one that is specific, measurable, attainable, relevant, and time-based. Okay? So when you have a goal that is all of those things, it is specific in that it is clearly defined, the goal, right? Okay, so let's just see, give an example. Specific goal is I'm going to reach $1 million in revenue in my company. That's specific. It's very specific and it's measurable. It defines exactly what you're going to do and it's attainable potentially. You define if it's attainable. Can you achieve it? Is it relevant? Yes, relevant to my ultimate success that I want in the firm. And is it time bound? Well, for me, it's 1 year. So it's time bound. It's very specific to I will complete it by this date. Like my 5 New Year's resolutions, I complete it by December 31st of each year. So when you set goals and they are in that format, you ultimately have measured success that you can achieve. You can see it, you can taste it, you can feel it. It's wonderful. It's an incredible experience. And now on to our presentation for today. Now, it's time to talk to Jeff. Jeff, we've been working together a long time, several years. And we've done some flips, and I know that you've personally done flips yourself. That
hmm
you have been involved. How long have you been involved in the whole world of financing?
I remember the exact date. It was October 15th, 1992. It was a rainy Wednesday.
Wow,
And
I think that would make you old. I
that
mean,
might make me old. I've had a lot of work done, so hopefully I don't look that old.
Yeah,
So
you don't look as old as you did 2 years ago. That's for sure. You've younged up, man.
yeah, lost a little weight too. It'll do it.
Yeah, that's amazing, man. You've lost
Yeah.
like how much have you lost now?
We are up to about almost 59 pounds. So
Woo!
yeah,
Hey,
yeah,
that is amazing. Now,
just
I'm going to be talking in a fun part of our podcast, we're going to be talking about some amazing stuff that Jeff and I have done together in the way of getting a little bit crazy, maybe scuba diving in other parts of the world, that kind of stuff. But right now,
yeah.
it's a little bit about his experience, and I want to really draw, some information from you. I hope you get a lot of tidbits and tools and tricks about lending. So tell me what your experience is when it comes to lending and short-term money, like construction loans and like fix and flip money.
Yeah, so as I mentioned, I got into this crazy business in 1992, back when they didn't even have FICO scores or credit scores or anything like that. And since then, I kind of migrated from mortgage broker to mortgage banker to having my own company to, working on the broker side. And about 1995, I started getting this epiphany that there were a lot of investors and borrowers out there that needed some alternative means of money, some alternative financing solutions. So I dabbled in hard money, or sometimes it's called private equity. And I learned all about it. It was a great niche and a great tool for investors to use. When they either can't qualify for a regular bank loan or regular financing, excuse me, and they want the loan to close quickly, and they understand that they'd rather maybe pay a little bit more, maybe just a little bit higher rate, for less red tape. And if the loan can close quick, especially on a flip product, it's a great tool to take advantage of. So I started really researching the products, and what I found out is it expanded not just to fix and flips, but also into commercial financing, bridge loan financing, construction loan, multifamily, hospitality, retail, wholesale, pretty much anything that's real estate, this can be applied to. And then the world of DSCR lending opened up, which is really cool. That stands for debt service coverage ratio, where if we have a self-employed borrower and maybe they don't qualify traditionally, with tax returns, we can qualify them just based on their lease. So we take the lease amount, divide it by the PITI payment, and as long as that debt service coverage ratio is 1% or less, they'll qualify. There are cool things like bank statement loans for self-employed people. As I mentioned, fix and flip, which we could talk a little bit more about, that's really hot right now, and just bridge financing and construction. So
So
everything
tell me
that's
so bridge implies that they basically have money from their own house that they put into the pot and get a loan with it, and they're going to go into another house soon. Is that bridge? Am I thinking right?
Yes, that's one type of bridge loan. There's a Fannie Mae bridge loan where if somebody has their house on the market, they've identified another house they want to buy, but their primary residence hasn't sold yet. They can actually do a bridge loan, pull money out of this home and use a down payment to buy the new house.
Okay.
And then once their house sells, then they can pay it off and go with regular financing. But in the private equity world, bridge financing is when you find a property, an investment property, and let's just say it's a lot of offers are coming in and it's a multiple offer situation and you want to be competitive. A bridge loan can close in 3 days, as little as 15% down, no income, no asset. It'll be a hard money loan. Now, the key, Jake, is it's got to be non-owner occupied. So it's got to be
Okay.
an investment property. Yeah.
Got it. Okay.
Yeah.
That's a pretty good deal. Okay, so tell me about just your standard short-term money you do an investor and you found a property, it's for sale for 500,000. You think it's
Hmm.
going to finish out at 1 million. You've got 250,000 to put into it,
Hmm.
right? So you're going to make 250,000 in profit. It's going to be held for
Hopefully.
like 9, 10 months. Okay. What does that look
Yeah.
like for a lender?
So yeah, so basically, and I have investors on all different investment levels, people that have done 30 flips and the first time flipper that's interested in just doing their first flip. So what a lender would look at, there's three main categories. They'll look at your credit score. They will look at your track records. So in the last 3 years, they'll do a look back and they'll want to know how many projects you've done. Have you done one flip, two flips, three flips? How many rental properties have you bought in? And then they'll look at your down payment. So it's almost like a custom loan. Each loan can be a little different. There's no real canned answer. So, for example, for a brand new guy that says, "Hey, Jeff, I want to get into flipping. How does the loan work?" Uh, what we would look at is I would ask them their credit score. Ideally, they're going to want to have a 680 or higher credit score. On the first flips, it's going to be 20% down. So that's 20% of the purchase price. So given the example, Jake, that you just told me on 500,000, 20% down would be about 100 grand.
Okay.
And let's say they've gone through the house and they may or may not have their contractor with them and they've identified it needs, let's just say 150,000 of rehab,
Mhm.
carpet, paint, countertops, flooring, trim, everything that they want to do to remodel the home to sell it. So we have 500,000 purchase price, 150,000 rehab. That's 650,000. So they would come in with 20%. Um, Assume they have a 680 credit score. All of that rehab can be financed in the loan. So the whole 150,000 can be financed and they can access it via draws.
Mhm.
And so draws are on a reimbursement basis. So
Okay.
they'll do the countertops, let's say the cabinets, the paint, the trim, and that might cost
You do
40 grand.
inspections?
The lender will do an inspection each time they request a draw.
Okay.
And the interest rate is
Do
tied
you do
to also
pictures for inspections or do you have to go on site?
the lender will send their inspection guy on site just to make sure the work's done to
No.
reimburse them. Yeah.
Okay.
If they say there's new carpet, there better be new carpet.
Yeah, right.
If they say windows, the windows better be in, or you're not going to get your money.
Yeah.
Interest rates start at about 9% and go up to 12%,
Hmm.
and they're interest only. Loan fees anywhere from 1.5% to 3%. And again, that's depending on experience,
Hmm.
credit, and then down payment. So it's a
Okay.
great tool.
It sounds,
It's a
yeah.
great tool.
Okay.
Yeah.
So do a little calculation for me. Can you tell me if you got a $650,000 loan, you put 150 down or 130 down on that, you're at like 520 carry.
Mhm.
What is the approximate monthly payment if you're at about 10%?
It would be interest only. So if my math is right in my head, the monthly payment would be, what is that, 5,200?
Yeah,
I might have to
520.
use my, yeah, I might have to use my calculator.
Mhm.
Give me one sec. Yeah.
I know you're good at that. You're good at that finance calculator.
Yeah.
I'm
No,
not
I
good at
take
that finance calculator. I learned that back in college days, and I couldn't stand it then. I'm good at other things when it comes
I
to
wasn't,
accounting, but
I don't
woo.
know why I don't know why I'm in this business. I sucked at math. I did. I really did. I hated it. It was my worst subject, but percentages I get, things
Yeah.
like that. But the monthly payment about 4,300. And then
Okay.
what's really important is what we call the ARV, and that's after repair value. So what we're going to look at is 500,000 plus 150. So we're in it all in for 650. So we're going to, in theory, hope the home sells for at least 850
Okay.
because there's things like carrying costs, loan costs, closing costs that all add up. that'll break into your profits. So what I do as a service and a tool is I have a spreadsheet with all of the costs you can expect. So there's no surprises from your down payment to closing costs to carrying costs, which are the loan, the payments of the loan.
Mhm.
And then selling costs, you're going to pay a realtor to sell it. There's excise tax, there's title and escrow fees. So all of that adds up. And when I first did it, Jake, I actually did a flip myself. I tried it. And I lost about $100,000,
Oh,
which you're going to help me right off this year, by the way. You are going to have to help me,
that's
sir.
nasty, man. Woo!
It is, but what I did was and this was my first one, so I did not, plan accordingly. I did not count all the costs. Plus, it was actually during COVID, so we had some unforeseen delays, so it was kind of a one-off. But yeah, so that would be my next piece of advice is before you do it, make sure you have a good contractor, make sure he knows what he's doing, make sure he looks at the roof, looks at the foundation, because you don't want to have a cracked foundation and all of a sudden your profit,
Yeah,
goes out the door. So yeah, and then I do, the big multifamily commercial as well. And I'm licensed in all 50 states. So
oh, you're
kind of
licensed
a
in all 50 states.
yes, sir. Yes,
Man,
sir. We're
that's great.
we're we did a project in Florida, Bradenton Beach waterfront. It's going to be a fix and flip for 3.2 million. So we can do just about all 50 states.
So,
Yeah.
so it doesn't matter necessarily the the house size and the loan size. It's a matter of whether you look at this whole project and say it will sell here, and
Yeah.
therefore we can do the job.
Yeah, and we want to be realistic too. Ideally, we want to look at comps or comparable sales in the area and kind of get an idea of what the home will sell for after it's been completely remodeled. Because obviously, after it's been remodeled, it's going to sell for, more than when you buy it. But yeah, I will look at the numbers. I've had investors where they get so excited. The gentleman that was just in your office a little bit ago.
Yeah.
Uh, Great investor. He works with me. But yeah, there have been times when he sends me a deal, if you will. It has the address, it'll have the purchase price, it'll have the rehab numbers and the potential ARV. And after I scrub it, go through everything, figure out the buying costs, closing costs, selling costs, carrying costs.
Yeah.
Sometimes it's
Just not ends up not being a
you're,
big deal.
there's not enough meat on the bone, as we say. Yeah.
Sure.
Not
Yeah.
enough meat on the bone. Or if it's a home run, or I think it's a home run, I'll let them know that as well. So
But see, that's good that, not only do you have the general contractor that goes out there and says it's a good or bad deal, but it's all
mhm.
it's all about the money in the end, right? And
It is.
you got to have a little bit of profit in this project or why take the time
Why
after?
do it?
Yeah.
Yeah, you don't want to lose money, like I did. But I've done a total of probably three flips. The other two we made a little bit of money.
Mhm.
I'm more on the other side of the fence. I'm more the money guy. I enjoy
But
lending a lot more.
but see, it's actually very valuable to have someone like yourself that's been involved in it on a good and a bad note. That is
Yeah,
incredibly valuable. You're even more cognizant and cautious when it comes to
right.
is this really going to make money, right?
Yeah, I tend to go in a conservative. I will add down to every penny, even the recording fee. Down to the monthly payments, like I said, the title and escrow fee, the processing fee, pretty much everything is transparent, and I will list and itemize each one on a spreadsheet, and they'll have a good idea to make an intelligent buying decision if it's something that is going to be worthwhile or not. So yeah, that's kind of what the space I like to plan. I also do conventional loans. I do VA,
Okay.
FHA type lending.
Now, when
I'm
this commercial or when this uh, podcast comes out, everything will be whatever it is, right? But
Sure.
today, it might be like 9 to 12% for a short-term loan like this, right?
Right.
Hard money loan, right?
Yeah.
And
Yeah.
what would be the average rate for a good credit score on a standard mortgage for a primary
Conventional.
residence good
Sure.
credit?
Yeah. So, on a conventional loan, primary residence, so owner occupied, what we call full documentation. So we're going to verify your income. If you're a W-2 salaried employee, we'll get your W-2s and your pay stubs. If you're self-employed, we'll get the last 2 years of your taxes and K-1s if those are applicable. But if just a standard 20% down, let's just say, with a 740 credit score, we're looking around the 6.25-ish
Okay.
range, six and three eighths APR.
So what
So
was the highest rate that you've seen, in the last couple of years? How high was it?
yeah, a couple of years
For
ago,
the same thing, or for the conventional?
yeah, they were pushing 7.75,
Ah,
which traditionally is not high, Jake. When I bought my first house with my first wife, um, I bought it. First house, first wife, 1995. My rate was 9.125 with U.S. Bank Home Mortgage, and I was happy to get it.
man.
9.125. And so again, this was 1995, and then rates came down and I refinanced at 6.375. And then the lowest I've seen was during COVID back in 2020. What's crazy, you wouldn't think interest rates, but I got down to like 2.1% on a
Wow.
15-year fixed. It's almost free money at that point.
Yeah. Yeah.
And everybody's hoping they'll return. I don't think they'll go back
Uh-huh.
that low, but hopefully the Trump boys and company will get them as low as you can.
Yeah, it is likely that we've been when I'm talking to others, I'm also hearing that we're looking at probably a better interest rate here as time goes on, for like,
Yeah.
yeah.
Yeah, that's, as the economy, personally, I think with this administration, I think we'll see rates come down a little bit. Hopefully inflation, will come down a little bit. Home prices are still very stable. And in fact, in some areas, like there's specific areas or pockets, like Bellevue, Kirkland, Bridle Trails, Mercer Island, some of those higher end will always have appreciation. I'm
Mm.
seeing that they're always, going up every year. But
They're just very
um,
coveted locations. Yeah.
yeah, and people are always asking me, when is the best time to buy a house?
Uh-huh.
My answer is the same right now.
Uh-huh.
Right now, if you look at what you're spending on rent and you look at a mortgage payment, the mortgage payment's probably going to be a little higher. But as you know, Mr. Tax Guy, the interest you can write off and other things on their taxes to where it can bring down your taxable income. Plus, you're gaining equity in a home over
Mhm.
time. Uh, you're making your landlord richer by paying rent versus, the American dream. And sometimes homes might be more affordable than people think.
Mhm.
Yeah, it might just be an extra $300 to $800 a month to own your own home. So, yeah, we do a lot of first-time home buyers as well.
Uh-huh. What are
Yeah.
incentives for first-time home buyer? Are
Well,
there any specific incentives? Like
right.
benefit or better rates or something. What's out there for the first time?
Well, a lot of it mainly is down payment. There's down payment programs available with down payment assistance, which sometimes can be zero or just 1% down. There's FHA, which is 3.5% down, but the 3.5% can be a gift from a family member or relative. And then of course for VA, if you're a veteran, it's zero down. So a lot of it is with the down payment, and also with FHA, it allows for lower credit scores. So I've seen somebody with a 550 credit score get approved for an FHA loan.
Wow.
Yeah, yeah. And and higher debt ratios, sometimes up to 55%. So FHA, they really want people into homes that they can qualify.
Hmm. Hmm.
Oh, yeah, I do those as well.
Okay. A person who's doing flips, right?
Mhm.
They are like myself, for instance. I've done a few dozen flips, right?
Yes, you
Just in
have.
the last handful of years. And what's going to be my incentive? What am I going to get because I have this experience rating and things like that?
Well, what'll happen is, let's just say you approach me, and I hope you do, and say, Jeff, we have another flip.
Yes.
You, given your experience
Yeah.
and your credit and your track record, you would qualify for platinum financing.
Hmm.
So you would be at the top tier, and to get to the top tier, it's 10 or more flips in the last 3 years, and
Okay.
ideally a credit score over 720. So the interest rate, we would be probably in the mid nines,
Okay.
and you would be at the lowest, probably 1.5% for a loan fee. So
Okay.
as opposed to sometimes as high as three. And you would also qualify for just 10% down
Okay.
of that purchase price, which is cheaper than conventional financing. So on a conventional loan, if you're buying an investment property, they want 20% down.
Hmm.
And you have to qualify what we call full doc or DSCR. So with the hard money loans, there's no income qualifying. It's
Okay.
based on your experience, your track record, and your credit score. So given the example, let's use the same example of 500,000.
Yeah.
So 10% down is 50,000, and we have another 150,000 in rehab costs. So we can finance that in the loan. So literally you could come to the table with 10% down plus closing costs of roughly maybe 12,000 at the most. So
Okay.
all in about, in that instance, about 62,000.
Okay.
And hypothetically, it would take, well, hopefully you would finish it ideally in 90 days or less.
Hmm.
So by the fourth month, it would be going on the market.
Yeah. Yeah. That's what we work towards, right?
Fast.
All the
Yeah,
time. We're looking at the details. Some of them just don't, but we try it. That's kind of the goal, about 60 days into
if we
a
can,
lot of
yeah.
hardcore remodeling work. And if there's no permit issues, if there's no underlying issues, and if the
Yeah.
contractors are, doing their work, then we can normally get it done in 60 to 90 to have it on the market.
Yeah, yeah. And so I know, Jake, you've experienced some success personally with some flips, and I think I've crunched a few numbers for you in the past. And
Yeah.
yeah, yeah, it can
But
be
we've
lucrative.
had our failures. Man, I'll tell you, I
Yeah,
definitely had a failure. I'm still holding on to one property because it was a failure that I'm still upside down on it. Just trying to
yeah,
breathe again. And even after a couple of years of holding this thing, it's not
yeah,
going to make me any real money. It's just it's there. Lost
yeah.
money. You just never know, right?
Well,
Just like yours.
well, yeah, it happens, but if you do your homework up front, as I was saying, you look at the numbers, you really analyze the costs, which I will help you do, and make my recommendation if it's a smart investment or if it's not. And again, having a good contractor or a good inspector that's going to crawl in the crawl space with a flashlight, that's going to go up on the roof, that's going to look in the attic and not see mold, or not see cracked foundations or not see faulty wiring, hopefully no surprises. And then, a realistic idea of a selling value. What are the comparable sales in the neighborhood selling for?
Mhm.
You know, and maybe even go 5% conservative on that. Allow for a 10% contingency in your rehab budget, just in case you have some cost overruns. So
Mhm.
all,
We have a
all things
project
I
right
can help.
now. We're doing a triplex, and it was all just kind of scheduled and going and happened, and then all of a sudden, some homeless people came in, ripped all the wire out, and started a fire in the closet.
No.
So
Oh.
so it was an insurance claim, and
Mhm.
we're just about done now getting that back into a position where we can actually carry on with the work. We're getting it back up to
Sorry
par,
to hear
but they
that.
took out tons of wiring
Yeah.
and made a mess of the place, and so you just never know what's going to happen. Uh,
Similar horror story. On the flip that I lost 100 grand, we had squatters
yeah.
move in. They changed the locks. So they got their own locks and changed them. And in fact, we went back there to look at it, and we see a sleeping bag, and then we see our locks on the floor. So during this time, of course, we called the police. So we went to Home Depot, got six brand new sets of locks, changed it out, and in fact, we hired, I'll call him my nephew, to stay at the house. So
Oh, okay.
until it was done.
Okay,
So
good. Yeah.
yeah, to stay there, we paid him. But yeah, be careful because once they're in, I hear there's such things as squatters' rights, I guess, and it might take
Yeah.
forever to get them out. And yeah, so
What a royal, yeah, pain. Man, cross my fingers. I don't get stuck with
yeah,
stuff like that. I don't want to
no,
deal with that. Yeah.
yeah, part goes with the territory a little bit. That's the exception, not the rule, though. I don't want to scare anybody from
No.
flipping. Those are, vague circumstances. So get a good ring camera,
Mhm.
that'll and a light that'll come on that'll scare people away
Yes.
for the most
I
part.
think that I think that protective services will also tighten up their belt as to how they deal with these people too. I think we'll nip
Yeah,
it in the
let's
bud
hope so.
in the next 4 years. I hope that will be much more of a clean cut situation. You know,
Hmm.
we'll see.
Yeah,
We'll see.
yeah,
But we'll keep on working through those variables, and we'll keep on doing flips because there's money in flips, and
yeah,
it produces. We produce beautiful homes for people, and that's always rewarding to
for
have
sure.
a fabulous house that maybe looked like something ran over it and destroyed
Yeah.
it is now something beautiful.
Yeah, and and you do beautiful work. I've personally seen some of your flips. You're not doing builder grade stuff. You're not doing like renter quality upgrades in your homes, and you don't want to do that. You don't want to just slap it together as cheap as possible. You want to use good quality stuff. I mean, it doesn't have to be gold faucets, but certainly not cheap chrome. So yeah, it does help to use good quality materials. That's for sure.
Hmm. So, what are some of the common mistakes that you see that real estate investors make? I mean, do you have a few ideas of what to avoid in the process of buying and doing these flips?
Yeah, so a lot of times they'll go in really, really fast. And sometimes they'll make the offer, but won't do the due diligence that we talk about. And so they won't necessarily look at, for instance, the carrying costs. They'll forget about selling costs. Excise tax. What is Jake? Is excise tax 1.8%?
0.7, I believe, in Washington.
Yeah,
And
yeah.
then you have
So
some local things too. So, yeah.
yeah, yeah. I mean, on $500,000, that adds up. That's 9 grand.
And it's higher if it's over, is it over a mil
A
or,
million.
yeah, and then it
I
raises
think
again.
so.
Yeah.
Yeah, yeah. And so, when they're doing their spreadsheets, things like monthly interest payments on the loan. If that's 4,000 a month, then it's 5 months. Well, you have to take 20 grand out of the profit category. Closing costs, excise tax, you have to take it out of the profit category. So some of the common mistakes also I see are they don't look at the house from top to bottom. They don't scrub it from top to bottom. I've sewer, or excuse me, septic systems is a big one. Where they won't have a septic inspection, then all of a sudden they have a bad septic and a bad drain field, and I've seen that it's 90, 60,000 and $90,000, killed the profit, killed the deal.
Know
So
about
that's a big
that.
septic. You know about that. Septic can be big time. That can, if it's good, that's great, but have it inspected. Make sure it's not leaking. Make sure the drain field's okay, because
Mhm.
that's a big one, guys. Obviously, roof and foundation, you want to make sure, unless you've already budgeted for it. Unless, okay, in your numbers, new roof, 40 grand, new foundation, 50 grand. But we better make sure there's a lot of meat on the bone,
Mhm.
because those add up quick. Yeah.
How have you heard any tips and tricks about how people find good construction people and good companies to work with, or is it just a hit and miss? I mean, how, you know?
Yeah, and that's a great question. Usually by the time they get to me, they have their, savvy investors that continually do this, this year after year. It's their full-time job. They make money on every flip. They have a good crew. And that's key. People that they show up for work, they know what they're doing, they get in quick, so to speak. They're not dragging this out for months and months and months, but a good rehab crew is important. It can make or break it, whether it's your next door neighbor, hopefully knows what he's doing, or your uncle, who maybe fixed the faucet once or twice. Probably don't want to use him as much as you love him. But yeah, that's important. That's important, is having somebody that knows what they're doing, and they can get in and get out for sure. Yeah. Yeah.
Okay. All right. Enough of that number stuff, man. Some people are probably falling asleep right now. I hope not. I hope it's,
Well,
good information.
let's liven them up, Jake. I noticed you're wearing your Great Barrier Reef hat. That looks familiar. Were you
Yes.
ever out, maybe right before COVID, on the Great Barrier Reef
What
in the
year
middle of nowhere?
was that 2018,
2019.
19? Okay, that we went to the Great Barrier Reef and went scuba
On a
diving
on a liveaboard
on a
boat,
liveaboard boat for like 3 days.
3 days.
3 days. That was a ton of fun. The weather was so good. Australia was incredible. And of
Was
course,
incredible.
when we got to Cairns, was it, I think it was Cairns, right? Yeah,
Was Yeah.
when we got to Cairns, we had to do a little exploring
Bungee
around
jump?
the area, and we found this amazing jumping place, right?
Yeah.
And we all went and
Skydiving.
yes, what do you call it? Bungee jumping, right?
But when we did bungee jumping in the jungle,
Yes,
it was the highest. I think it was the highest bungee jump in
in Australia at least.
Australia, and
Yeah,
then I forget. But anyways, it was 150 feet high in the
meters.
middle. Yeah, that's right, meters.
Yes.
In the middle of the jungle, and it had this pool. And what they did is they stocked the pool, guys, with live 3 feet piranhas that would jump out, and they could look up and see, oh, here comes Jake. He looks tenderizing, yum. And so Jake would come down, and they bit Jake's Achilles heel, and he still walks funny to this day from that, don't you?
Well,
Jake still walks with the limp from the 3 foot tiger piranha.
well, I remember that you didn't want to do it, but you did it, right? You did one.
Dr. Dan didn't want to do it. I was okay with it.
Oh, okay, okay. Dr. Dan, he sat up there on the plank, He's and I watched him, and he was not doing it. I
Right.
mean, it
He
was
was, he was, he was shaking. And then there's you, and you got in trouble because it's already freaking 150 meters, but then you saw a back door. And guys, I'm not kidding. Jake goes out and he goes on the stairway up, and he gets on top of the whole thing, which is illegal, and does like a quadruple flip, high fiving everybody on the way down, goes in the water. There really was a pond there. There wasn't any
yeah.
piranhas, and then comes out.
It
So,
was great when they did the first dive. They said the jump. When they did the first dive, they said, "Do you want to get wet?" Right? And I'm
right.
like, "Oh heck yeah!" You know, so
Yeah.
he adjusted the length of the bungee cord, and sure enough, boy, I went down there and got dunked in that water, and it was great. But I'll tell you,
Bacteria.
you're up there at 150 meters, and you're looking down, and what was a pond is now an itty bitty little, mud
You know
puddle.
what? That bungee jumping was scarier to me than when we went skydiving. I
Yeah.
wasn't quite as afraid when we went skydiving, but the thing I think that was probably most fun was on the same trip, guys, we went over to Fiji and went in the Becca Lagoon, 80 feet down, and did a shark dive,
And
tiger
man, there
shark,
were dozens of sharks.
tiger sharks. And no protection. They just have this little rock wall, and you're supposed to be, you're on your knees, and these guys, they just, and they're coming right by you. And all these guys have are these metal sticks, kind of, I don't know what you want to call them, basically to
Pitchforks
keep,
or something, yeah.
yeah, to keep the sharks
But
away.
then there's me, right? Do you remember
Well,
that?
I look over because and I'm like, Jake was supposed to be right by me, and I'm looking around, and all of a sudden I look up, guys, and Jake has gone up without permission around, and he's gone up to the
Permission.
without permission to the feeding trough. They have this huge garbage can where the food comes out, where all the sharks are. I mean, there's probably like 80 sharks and fish, and he's up there with his hand in the cookie jar trying to pull out feed to feed the sharks himself. And all of a sudden the instructors, they see him and they're like, ding, 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 get down here, ding, ding, ding. And he got in trouble that trip.
Wow.
Yeah.
I don't know how to, I can't even tell that story straight now.
Yeah, it's
But
true.
do you remember the first time that, I don't know if it's first time for you, but seeing the fish on the rock? Remember the cones that we went swimming, that we went diving around, and
Oh,
we saw,
yes, yes.
and there's kind of a hole kind of
The
in the
lionfish.
lionfish, yeah. And I'm like, every this old man, he's scuba diving, just floating along, and every now and then he'll point, and that means look. And so he points, and I go over there and I look, and this fish just light up with color. And I
Yeah.
go and push the water at him, and it just lights up with color. And I get in a little closer, and the dive master, he kind of
No.
pulls on me and pulls me back. He said, no. And I'm just like, what?
And I did that too because I knew what that was. That's a lionfish. And I looked over and Dr. Dan's like he's going to go pet it like a cat. And I grabbed his hand and don't you touch because they have spikes. He would have been lit up and
Oh,
who knows what would have happened. So
well, they
yeah,
say those lionfish, man, you get a few minutes and you're in deep doo-doo at that point. They'll
you're
stay.
you're in deep doo doo.
Yeah.
Yeah, but no, that was a fun trip. Yeah, we did scuba diving, skydiving, bungee jumping, and
Yep.
who knows what else. So
It was pretty cool. I do remember when we got done skydiving, we're in the field of the airport,
yeah,
and he instructs you to basically raise your legs up. We're doing double. What do they call that?
yeah,
Uh,
tandem.
tandem, right? We're doing a tandem, and the guy's like, lift up your legs, and I'm going to be the one walking. So I lift up my legs, and I'm walking, and then I see you, and you guys like just kind of planted, and slid across the glass,
Yeah,
and you get all
yeah.
disconnected, and so you, Dan, and I kind of come together, and I'm like on fire with excitement. I'm like, Dan, Jeff, let's go do this again, and you're just like, no.
I did not. I did not. You always say I say no. But what we did do right after that is we were so wound up is you get on the phone. He goes, "You guys want to go fly jets? You want to go Mach 12? Yeah. Let's go find some fighter pilot jets." And I think you got him on the phone.
I
Do you
did.
get, can we book it? Okay. How much? Okay. How about an hour? And so I think we were going to do it, but they couldn't find a pilot the
They
same
couldn't
day.
find a
So
pilot, and then this was when they had the fires in Australia.
yeah.
And
Yeah.
so the smoke was kind of coming in, and they said, we can't, there's too much smoke in the air, and it,
Yeah,
yeah. But we would
yeah.
later go do that. We would go do that in Vegas. We went flying in the fighter jet, and I still got to bring you down there and have a little fun.
I know. And then wasn't there, didn't you guys shoot M50s out of a
Oh,
helicopter?
oh
Yeah.
yeah. Oh, that was some kind of fun. Yes.
Yes. Yeah. So we're kind of we have a little club called, it's like an adrenaline junkie club. It's like this group of us that we go to these different adventures, and it keeps us young and keeps us for the most part out of trouble.
That's
So,
right.
yeah.
Okay, so do
Yeah.
you read books?
I every once in a while I will read a book.
What's a good book that you've read? What's just,
You
something
know what?
interesting or,
The
of any
best
kind.
book, yeah, the best book that I finally finished after 4 months was the Holy Bible.
Oh, that's amazing. Yeah, wonderful. Super awesome. Yeah,
That yeah,
read that a couple
read the
times.
yeah, read that's probably the latest book
The
that I
Old
read.
and the New Testament?
Old in the New Testament, and then went back and did the New Testament a couple more times. So yeah, it
Yeah.
helped me lose the weight. Let me tell you, one of the sins is not being a fat guy. So I got in the gym. I'm
Hey,
teasing. I'm teasing.
that's great. That's great. Okay, so
Yeah.
then tell me about a guilty pleasure that you just refuse to give up. You got to have it.
That's a good one. Well, actually, what I used to have a guilty pleasure. I enjoyed cigars, really, really good, like premium cigars. It was
I got
kind of
a
a,
picture. I got a picture of this guy. He is like wearing his shorts. I
oh
think
yeah,
in like January, right? But we're in
probably.
Australia on the
Oh yeah,
southern hemisphere, so it's like 90, right? And you
yeah.
got just your shorts on, and you're in this apartment that's right next to where we would scuba dive, and you are just on that cigar, walking back and forth, and we're just like we hear the birds, all these unique, weird birds. It was
Yeah.
just like it was perfect, out there just
Yeah,
having a peaceful, great time. Yeah,
probably something in my right hand too that resembled a bourbon.
maybe.
Um, may or may not. I can't confirm or deny. Um, yeah, but I would say now, because I'm kind of watching the weight, but I am a sucker for a Krispy Kreme donut every
Oh,
once in a while. Yeah,
uh-huh.
Krispy Kreme where you put it in the microwave, heat it up for, maybe 15 seconds, and it's like cotton candy. It just melts in your mouth, and you just
Yeah.
can eat 15. But yeah, or French fries.
French
You know,
fries. Mm.
guilty as charged.
Now
But
you
other than
met,
that, yeah, trying to watch the weight and
mm.
keep it off.
So if you had to talk about why customers should choose you, tell me why they would come to you to utilize your services.
Guys, it's this right here. You see that? That is gray hair and experience. Yeah, I've been doing this since 1992. I've dealt with, hundreds and hundreds of lenders. I'm pretty familiar with all their loan programs. I know by now how to package a loan, how to put it together, how to submit it to the right lender, and more importantly, how to get the best product, rate, pricing for my borrowers. I will look at your financial picture. We will game plan together on the right product, on your financial goals, on your needs. On this one, for the end game, for the long term, we'll kind of strategize, do some planning. So yeah, I've been around the block a few times and I've made mistakes. I've definitely learned from the mistakes. And I've just kind of come out where I have a pretty good understanding of how of the loan products, the services, the market, and with most things real estate related. So yeah, I would
That's great.
love to work for you and put my knowledge to the test and help.
Well, thanks for your time, Jeff, and
You bet.
thanks for all of the good trips. We're of course gonna do many more. We're gonna
We
have
are.
fun, and we're gonna do more flips together. We're gonna
Yes,
make
sir.
some money out there in the real estate market and the real estate
Yeah,
world. There's a lot of opportunity out there, and
there is.
that everyone has gotten some, like I have. I've gotten some little tidbits of great information, especially on some of these complex mortgage processes. So thanks for
For
your
sure.
time.
My pleasure. We'll talk to you soon, Jakers.
Thank you. All right. We'll talk to you. Bye.
That's a wrap for today. Be sure to subscribe and share this with someone who needs it. Check out jakehaynes.com for past episodes and other resources. And remember, success favors the bold. So work hard, keep growing, and take control of your cash flow so you can play harder.